Job growth, high demand, rising prices. What happens during the oversupply phase? Overbuilding, rising inventory, potential price drops. What happens during a recession? Job loss, foreclosures, home prices fall. What happens during recovery? Stabilization, buyers return, undervalued prices. Key real estate finance terms. What is disintermediation? More withdrawals than deposits in banks. What is collateral? Property pledged for loan security. What is equitable title? The borrower's right to possess and benefit from the property. What is leverage? Controlling a large asset with a small down payment. 2007 to 2008 financial crisis overview. What caused the 2008 financial crisis? Subprime lending, underwater mortgages, job losses. What programs were introduced in response? ARR stimulus spending. HAMP, loan modification support. HARP, refinance options for underwater loans. Dodd-Frank Act, financial reforms and creation of CFPB. And hashtag 128313, key financial info sources for consumers. Source provides info on how it helps. FDIC.gov Deposit Insurance, consumer protections assure clients on insured accounts. FHLbanks.com Lending and credit market insights understand local lending conditions. FHFA.gov Housing stats, foreclosures, refinancing understand home loan dynamics. FederalReserve.gov Economy, rates, policy track trends affecting loans. Treasury.gov Bonds, budget, financial data and national financial overview. Mortgage bankers versus mortgage brokers. Front, mortgage banker. Works for a specific lending institution. Handles the entire loan process start to finish. Personally funds or partners with local banks. Limited loan product selection. Builds long-term client relationships. Front, mortgage broker. Independent, connects borrowers with lenders. Offers a wide range of loan products. Does not fund loans or stay involved after the deal. Paid via placement fee. Faster turnover, less personal involvement. Credit unions and real estate funding. Front, credit unions. Nonprofit, member-owned. Regulated by NCUA, deposits insured by NCUSIF. Compete with banks via flexibility and fewer regulations. Grew rapidly after the 1998 Credit Union Membership Access Act. Focused on personal loans and mortgages. Life insurance companies and real estate. Front, life insurance companies. Invest in large-scale real estate, e.g., malls, towers. Prefer long-term, stable investments. Use participation financing, partial ownership. Avoid single-family housing loans. Fund projects through secondary market or commercial investments. Commercial banks and mortgages. Front, commercial banks. Funded mostly by demand deposits, checking accounts. Offer, traditional mortgages, construction loans, HELOCs, home improvement loans, manufactured home loans. Provide interim financing, 3 months to 3 years. Real estate loans based on equity or attachment of property. Mutual savings banks. Front, mutual savings banks. Primarily on East Coast, depositor-owned. Conservative lenders, focus on local residential real estate. 70% plus of assets from savings accounts. Regulated by individual state charters. Occasionally invest beyond their region with mortgage bankers. Bonds in real estate. Front, municipal bonds. Issued by local/state governments. Fund public projects, roads, schools. Tax exempt, low risk, low yield. Pay interest, coupon rate, to investors. Front, corporate bonds. Issued by businesses for capital needs. Higher risk and return than municipal bonds. Secured, backed by assets, e.g., mortgage bonds. Unsecured, debentures backed by issuer's credit only. Front, coupon, bearer, bonds. Not registered, ownership proven by possession. Risky and mostly phased out. Used to avoid taxes or for illicit purposes. Living and testamentary trusts. Front, living trust. Created while trustor is alive. Avoids probate, saves time and costs. Often used for minor children. Trustee manages assets per trust terms. Front, testamentary trust. Created by a will after death. Subject to probate. Costlier and slower to distribute assets. Land trusts. Front, land trust basics. Holds only real estate. Trustor is usually the beneficiary. Maintains privacy and control. Often used by investors. Front, community land trust. Promotes affordable housing. Trust owns land, housing sold or leased to low-income buyers. Front, conservation land trust. Preserves land for ecological or recreational use. Often created by nonprofits. Front, real estate land trust. Used for privacy, probate avoidance, and tax planning. Helps avoid due-on-sale clause. Allows easy transfer of ownership. REIT, Real Estate Investment Trust, requirements. Front, REIT requirements. Must be a trust, association, or corporation. At least 100 owners, no more than 50% held by 5 or fewer, 5/50ths rule. 90% plus of income distributed as dividends. 75% plus of assets and income from real estate. Taxable as a corporation, but not a financial/insurance institution. Individual financiers and private loans. Seller financing. Seller may finance part of the home purchase. Can use junior loans or contract for deed. Buyer must disclose to lender. Front, family gifts for down payment. Up to $17,000 per person annually, 2023 law, is tax-free. Gift must not be a loan. Example, for parents couple equals $68,000. Front, private loan companies. Provide short-term, smaller junior loans. Collateral required, usually second lien. Charge high interest and fees. Help buyers who fall just short of traditional financing.